You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means Double Pro Week is continuing here on the network. You're getting double doses of all of your favorite content. We just finished with a great double dose of Options Playbook Radio for all of you folks out there on the Secret Club. The live listeners got to hear both episodes now. All you on-demand folks will have to wait a little bit for episode 2, The Huddle, that Brian and I just did this morning. Of course, yesterday, all you Secret Club kids got treated to a double dose of pro Q&As as well. We went deep into crypto with Greg Magadini from Genesis Volatility, and then Return of the Viceroy, none other than Alex Jacobson. I haven't talked to him this year at all, so that was kind of fun to break into all the madness that goes on in those pro Q&As. Answered a plethora of your questions. Where do you guys go to get those pro Q&As, to get Options Oddities at the end of the week, to listen to Options Bootcamp live every week, including this week's special double episode? Why wait for podcasts? Who wants to wait for the podcast? Especially in this case, it's going to be over a week. So, fun stuff. So if you want to get all that stuff in your ear holes immediately, plus exclusive content, there's only one place to go, theoptionsinsider.com/secret club. I know you folks in Options Bootcamp land don't need any prompting. You are quick on the trigger finger with your questions. So you guys really should be participating in those pro Q&As. We have gone above and beyond to really bring the world of derivatives to your doorstep. You can pick their brains of pretty much just about anybody under the sun in the world of options and derivatives. So check it out. theoptionsinsider.com/secret club is the place to go to learn more. Let's learn who we're talking to today. Oh, wait, I forgot. Who else could it be but the black-hatted one himself? The one, the only, the inimitable, Mr. Dan Passarelli, the founder of Market Taker Mentoring, what the cool kids call UMTUM, and also the author of 1 or 2 or 47 options-oriented tomes. Mr. P, welcome back to the program. How are you feeling on this great Double Pro Week Education Wednesday, sir?
Ooh, man, excited about it. I love double episodes. Woohoo!
All right, then let's get to it. Remember, if you're listening on demand, we know a lot of you get the show on demand. All we ask is that if you like what you hear, keep rating and reviewing. It does help all the new folks, and we see it all the time. There are new people discovering this show in particular, just about every day. So if you want to help those new folks discover this show, find a, shall we say, more reputable source to learn about options from, then keep rating and reviewing. It really does help. This week's 5-star review comes from Robert Bright. I think this is from the App Store, our Google Play App Store review. Robert Bright says, great for covering all aspects of options trading and in a very entertaining way. Keep it up. Well, thank you, Robert Bright. We will. Right back at you. Thanks to everyone who took the time to rate and review and keep sending those new folks to our door. This show's been running for a while, but we always appreciate the new listeners. You are the lifeblood of the program. As we keep on rolling, it is time to get some basic training.
All right, boot It's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Call in. Prepare to learn. Yes, sir.
All right, everybody, let's get boot camping. Let's get back to basics. And Dan, we talked a lot, especially towards the latter portion of last year, about crypto options, about crypto trading, about BITO options. Seems like folks had a lot of questions about that. Understandable. BITO had just launched. It was kind of taking up all the oxygen in the room. Everybody wanted to talk about it. And then it seemed like folks got onto some other products. But it seems like the pendulum has swung back, Dan, and folks are intrigued once again by all things crypto options and BITO. Is that what you're seeing over there in the land of MTM as well, sir?
A little bit. I mean, I've been watching a stock called Nile, which is an interesting play, potentially a little bit underpriced. But they mine for Bitcoin specifically, but they got their hands in a lot of other pots. To me, that's the most exciting thing going on with crypto right now. But hey, it's fun to watch BITO and all that other stuff too.
I'm looking at this right now. Nile, this is BitNile Holdings. Ticker symbol, Nile, N-I-L-E, listeners. And trading right now a whopping 66 cents, Mr. Dan. So this is one of your more premium, pricey holdings, Mr. Dan.
Oh, indeed. So no option trading on that one. Just
I was going to say, if you're buying options on this, you're doing it wrong, right?
Yeah.
We just had Alex, the Viceroy, in our Pro Q&A hot seat yesterday, and the reason we did was because we had that poll recently about cheap options trading. He's always been very outspoken on trading options below $5 or $10 names, and he would certainly look at this one and say, no options to be held on that one. By the way, Nile, listeners, a year ago was trading $3.22, so it has fallen off a whopping 79% over the course of the past year. Mr. Dan, this come up on your rating. How'd you come across this one?
Yeah, I mean, it came across my screen here through researching some rating, but I don't know if it's really at this point, I don't know if it's really a solid short squeeze candidate, just maybe more a long-term buy and hold candidate.
Yeah, 66 cents, right? That's a flyer. That stock is an option at that point. So everyone was asking. I think we have a question about this a little bit later about options on cheap stocks. Not a lot of optionality needed in a 66-cent name there. All right, let's keep rolling here. Let's get out this first question. Oh, Meats. Haven't seen him in a while. He's been one of our Pro Q&A and Secret Club members. Mr. Meats with a Z. Welcome back, Mr. Meats. He says, hey, guys. Well, hello, Meats. He says, it's been a few months since you hit on BITO options. Can the people get an update? Can the people get an update? Yes, you know what? Ask and you shall receive, Mr. Meats. You want an update here on good old OBC. We got you covered. And BITO, we were just talking about this on OPR a little while ago with Brian. BITO does seem like it is capturing the fascination of a lot of people. Again, part of that, of course, due no small part to the recent rally we've seen across the board in crypto. Folks love a rally. They like get a little more interested in these names. They go out and see Bitcoin hovering in the mid 45,000 range. They see BITO at around $28, $29, a little bit cheaper in their estimation. So they're obviously attracted to BITO. And that has worked out from an options perspective as well. Just looking at the overall volume numbers, I pulled them up this morning. And the ADV right now, 59,000 contracts a day. So BITO, no slouch when it comes to paper right now. So people were kind of wondering. We saw a lot of hot IPOs last year and a lot of SPACs really hit with a lot of gusto, then kind of fade away. BITO hasn't done the second part of that trade. It hasn't faded away. It's remained pretty active pretty much ever since it launched. By the way, speaking of what's going on out there from an overall action and volume and volatility perspective, you guys, if you are intrigued by this, you should be checking out the Crypto Rundown program every Monday. It's kind of your one-stop shop for all this stuff, the skew, the implied volatility, all that kind of stuff. If you've been listening to that show, you'll know the volatility in Bitcoin has been slowly eroding for quite some time. It just hit into the 50 handle just this week. In fact, BITO followed suit. It hit a 52-week implied vol low 2 days ago on the 4th out there. So the implied vol out there getting pretty low is the technical term out there. Yeah, at about a 58. That was the low for the year out there. The high, if you're wondering, came in October, actually all the way back, October of last year with 94, almost 95%. We have seen Bitcoin itself get into the triple digits when things get pretty frothy out there. So Bitcoin vol kind of hanging out at a pretty low level. It's about as volatile as a decently volatile equity right now. It's nowhere near as volatile as it has been out there. Also, skew-wise, we have seen a lot of evolution. When BITO first launched, people were very attracted to it for the skew. The calls were leading the dance. They were very heavily bid over the puts. It was kind of like what you might see in a precious metals type option quite a bit, where the bid is usually to the upside. And we saw that in BITO options when they first launched. It was very pronounced. So you could do a lot of things. Covered calls were very attractive. Collars were also very attractive. You could buy BITO. You could buy a very tight put to protect your downside and then sell a call against it at a decently far out of the money call and usually get a credit or at least do it for break even depending on your strike selection out there. So that was attractive. You had very limited downside and a lot of room to run on the upside. It's kind of the dream scenario for collars. That has evolved as we've seen crypto and Bitcoin sell off pretty hard over the last month or two and then start to rally again. That sell-off brought the puts back to life. So that put bid started to pop into focus a little bit. And now as we stand, well, we'll get to that a little bit later. I think we have a question about skew. But as we stand right now, that skew is kind of flat, meaning there isn't a market premium really to the puts or the calls. Of course, that changed if you go farther out in time. And again, if you're intrigued by all this, we had a great guest in our pro Q&As yesterday talking about long-term options trades in BITO and how the skew changes across the term structure and a whole bunch of interesting evolutions out there. But Mr. Dan, first off, have you had a chance to trade any BITO options since the last time you and I chatted? And have you noticed these things we're talking about here, the implied vol coming in fairly aggressively over the course of the past month, the skew kind of leveling out, or any of these other trends we're talking about out here, sir?
This is one of the names that I watch now and then. And yeah, the implied volatility was it was really overpriced for a long time. Now, I feel like since the beginning of the year or so, maybe since February or so, it's trading a lot more like, I guess, what I would call a normal stock. And yeah, just looking at the volatility skew, I'm actually a little bit surprised that the upside flattened out so much. I would have expected a lot more, the call side to be a little bit more bid than it is. And I wonder if that has to do with the mix of who's trading. And I feel like the stocks, especially these meme stocks, where the upside calls are super bid is because there's huge retail playing in it. So maybe BITO's more of an institutional product. I don't know. It's really hard to say.
It has become very popular out there. I know Mr. Matt of Orat's infamy out there, the Oracle of New Hampshire, he's been playing it. We kind of lured him to the dark side on our Advisors Option Show. He's been trading it a lot ever since. So yeah, a lot of people have been starting to dive into it. Speaking of starting to dive into things, Dan, before we keep going with BITO, looks like you have thrown some fuel on the fire to our secret club listeners out there. They're liking your Nile. They're talking about the flow out there. They said, Mr. Unlimited said, someone bought 1,000 of the April 2.5 calls for a nickel in Nile today. So that's a bit rich. Has to pretty much 4x in 8 days. Yeah, I'm looking at it right now. That print, you're right, Mr. Unlimited. 1,000 of the 2.5 calls going up today for a nickel. Now those they could be shorts though, buying them back. These are not listed as opening, I should say. So I can't tell. I'll have to look what the OI is on the strike. So those could be closing. They could have dumped those for an aggressive level earlier. So be careful with those and not just buying those. It seems like willy-nilly. But still, he says even the June calls have some juice, can get to 20 cents. We were just joking about the options on this thing, Mr. Dan, but are you liking any of these buy rights at least, sir?
It was part of my plan, but no, I'm not really loving the buy rights just yet. I just think that there's enough room to the upside that, I don't want to sell Like, what am I going to sell? The 72-day, 2.5 calls for 10 cents? I don't know. I feel like I need a pop above a buck to see implied volatility get even more jacked than it is as a result of that to the upside calls, and then maybe get the opportunity to sell something for 35 cents or something. That starts to become a little bit more attractive.
Yeah, it's like there are 33,000 of these April 2.5s open right now, Mr. Unlimited. So I'm going to wager they're buying some of these back. They have been trading very actively. They were trading 15,000 traded on the 21st for a nickel when the stock was 83 cents. They traded 30,000 more on the 25th when the stock was 83 cents. Again, so the same level. The 28th, they traded almost 17,000 more. The stock was 94 cents. These options actually closed at 15 cents on the 28th. My goodness, they caught a bid. So if they sold them at 15 cents, I've got to wager they're buying them back. So they've been trading very actively, 5 to 10,000 a day, if not more, up to 30,000, pretty much throughout most of the month of March. So it sounds like someone's probably buying some of these back in. But there we go, listeners. We're just talking about options on cheap names, and here's a cheapy underlying, a decent buy right, but then again, give up all your upside in this name. It's certainly worthy of interest, if nothing else out there. Speaking of which, let's go back to BITO. Another question here comes from Aze, A-Z-E. Says, what do you think about using longer-term in-the-money options on BITO as a lower-cost way to play Bitcoin rather than messing with the spot or the futures? You know, it's funny, Aze, you should listen to the Pro Q&A we did just yesterday. We touched on this exact topic. It was an interesting suggestion. I have to admit, it wasn't a use case I immediately thought of when I first looked at BITO. I thought, I want to go load up on some leaps. But our guest there from Genesis Volatility was a pretty big fan of that as a surrogate for the underlying. Now, my caveat with that, and I expressed this to him, is that BITO has this erosion factor built in. It has this negative roll yield. Remember, we talked about this before when the product first launched. We talked about it again recently with VXX and UVXY, all these products that attempt to replicate some sort of underlying futures position. They have to make choices, and the devil is in the details. Do you focus all on the front month future, in which case you have to kind of keep adjusting that, and that's going to track very well, but it's going to get killed by roll yield? Do you go a little bit farther out so you're safer from roll yield, but then you don't track as well? Do you maybe make a basket of all of the above, so you're kind of a little bit across the board, but also a little bit protected? There's no free lunch when you're constructing an ETF like this. And that's what the BITO folks had to figure out as well. They're trying to approximate that front month futures position, and as a result, they're getting impacted by that negative roll yield. And it's not as bad as it seemed when the options first launched. People were talking about extraordinary levels of erosion, but you're still talking probably at least 13 to maybe 15 or 20% annually on this name. So that's a headwind you have to make up. Now, you're taking advantage of some of the capital efficiencies by buying a longer-term contract, so you're doing effectively a stock substitution. You don't mention your strikes, but if you're going to do this, you probably want to go out at least 6 months, probably longer, probably a year at least, and then you want to go pretty decently in the money. So you want to be somewhere definitely north of a 60. I'd probably more like a 75 to 80 delta on this type of trade. So you want to get a pretty beefy option. But again, you're not spending all that money. So that's a little bit of capital efficiency there. Maybe that'll help soften some of the blow of that headwind. But you're going to need something else against it. You're going to need a nice rally in BITO. You're going to need, maybe, talking earlier about that skew, maybe you do what Brian likes to call on his OPR show, the fig leaf, where you sell nearer dated quasi-covered calls against it to help generate some income. You're going to need to do something to offset some of that erosion out there. Mr. Dan, what are your thoughts on leaps as a surrogate for long-term crypto, sir?
I don't really like it at all, TBH, because the erosion, like, if you're comfortable with the erosion, you shouldn't be. It's just too much, you know? Like, I am pulling up, hold on a second here. I'm pulling up a 1-year chart of BITO and a 1-year chart of Bitcoin. It's kind of hard to tell here, but I got it on 2 different devices and the screens look so different. It's hard to tell. But I mean, with this contango roll because of the futures, holding something like this for a year is just an awful idea, even if you're selling calls against it. Like doing the poor man's covered call on something like spiders, that has enough of its challenges, but then you add something where there is an erosion to the price over time because of the roll. I don't know. I don't like it. I just don't like it at all. I would rather, I think that Bitcoin is going to, I think crypto in general is going to see its day again at some point, but I think it might be a little bit just to keep bloodletting some. Until then, in the short term, I would personally rather find ways to get short BITO on pops until crypto comes back.
Short BITO, man. I'm just looking here. I'm trying to get some updated numbers on the negative roll yield for BITO. It's a bit of a challenge out here. Of course, obviously, a lot of that driven by the slope of the futures term structure in the CME Bitcoin futures, which is, of course, what BITO is derived from, listeners. And when it launched, there was a pretty steep contango, and that usually comes back to bite these a little bit. That has mitigated somewhat, so that does lessen the pain. When this thing launched, they were talking at least around 20% annualized in terms of impact on just erosion off the top on this name, which is, again, that's a lot to have to deal with. It does seem like those numbers are going to be less now, but still, if you're going to do this, if you're going to even considering this, you need to be fully cognizant of what you're getting into. And if you are going to do it, like I said, you probably do want to have something else against it. Or you can be the Dan route and not like it. Dan's poo-pooing everything today. Dan, are you just not in a good mood today, so you don't want to trade anything? You want to go trade your Nile?
No, I'm in a good mood. I just, it's just something that you got to be really, really careful about. I don't know. This one I just can't get on board with.
Let's see if you can get on to this next one. We got so many questions about this. We go, watch out. Watch your personal identifiable information, Dan. Next question is from Russian hacker. He's hacking us as we speak. Watch out. Do whatever you do. Do not say my mother's maiden name on the air, sir. That'll be the death knell. I apologize for saying your social security number earlier, Dan. So we'll see if we can delete that from the podcast. Can't help the lie, but we'll see. Russian hacker wants to know, is a bullish risk reversal a viable approach to getting long BITO here? I'm thinking 1 to 2 months out and 5 to 10% in each direction. So bullish risk reversal, listeners, obviously selling an out of the money put, buying an out of the money call, getting a long delta, which gives you some approximation of a long bullish position in the underlying. I like myself a good bullish risk reversal. It depends obviously on how the skew sets up in certain names, whether you want to do it. Like, for example, in a lot of equities, bullish risk reversals are a great trade because the puts are bid up to high heaven. The calls are pretty cheap. So you're selling the expensive thing, you're buying the cheap thing. It's a great way to get a pretty lower cost exposure to a particular equity underlying. We don't see the same skew setup in BITO, which makes it a little bit less favorable for me. I will say, that said, caveat there, I mentioned the skew has evolved, and now it's not, when we saw the teeth of the sell-off a few weeks ago, we saw the puts getting a little bit juicier, a little bit more bid. That would have been a more attractive time to do this, Russian hacker, because you would have got probably a little bit of a decent credit for selling that put versus buying the call. As it stands right now, I pulled these numbers right before showtime. A BITO was hanging out right around a 29 when we pulled these. So we looked at your 10%. You wanted to go out 1 to 2 months. We went out about a month and a half, right between that. So right in the May monthly expiration. We looked at that 26 put. Again, you're talking roughly $3 out of the money there, right around 10%. That was trading right around $1.30, and the May 32 call was trading right around $1.25. So you can see right there, only about a nickel worth of credit. Now, that said, that's more than you would have gotten when BITO first launched. So if you go all the way back to those days, that's actually pretty attractive. So I guess it kind of depends on your frame of reference. Right now, I don't hate it, but I don't love it as much as I would have maybe a few weeks ago when you really would have gotten some juice for this. So it's up to you. I can't tell you whether a nickel is worth it for you. I don't know you. I don't know your risk tolerance, but you're only getting a nickel. And remember, if you're selling that 26 put, that's going to be your big risk factor on this trade. If BITO dips below 26, and it was down there not too long ago. Let's see if I can, where was the low? It was 23.5 just on March 7th. It got to 22.31 at the end of January. So it can easily breach that 26 strike. So you have to be prepared and willing to buy BITO at 26 and pretty much right at 26. You're only getting a nickel for this. You're not getting a huge credit to really offset that at all. So it's up to you whether you think that merits it or whether that's worth it. Again, it's better premium now than it was back when it launched for the puts, but not quite as juicy as it was a few weeks ago. So you may have missed the boat by a couple of weeks here, Russian hacker. Mr. Dan, you're not a fan of long-term trades on BITO. What about bullish risk reversals?
I mean, it certainly depends on the forecast, on the outlook. But it could be interesting. And I was just looking at a comparison chart between Bitcoin futures and BITO, and it just confirms what we were talking about here. So definitely not a super fan of that. But I've got to get rid of this compare with business here. But yeah, I mean, I don't know. As far as doing a risk reversal like that, maybe, because the lower strike, I mean, it depends how far out in time you want to go too. The lower strike puts are just a little bit more bid than the calls, so you get that little advantage. And if you believe that the floor is in on Bitcoin, as long as you don't go out too far because of, again, the natural decay from the roll, I don't know. I mean, I think if you think that there's a floor in on Bitcoin and there's the possibility for a pop, it could make sense, I think.
Yeah, I guess I don't think we hate it. I don't know if we love it either. Like I said, I would have liked it maybe better a few weeks ago, a little bit lower, a little bit more juice. Could have got a more attractive level on the put. Where we're hanging out right now, not as much, but if you're into that level, you like that 10% level, so that works out to about a 26 in BITO. If you're into that, I forgot what was the name. Oh, right, Russian hacker. How could I forget that? If you're into that level, Russian hacker, have at it. Like Dan said, don't go out too far. We went out about 6 weeks on this example. I wouldn't go much beyond that 2-month window you were talking about, because that kind of mitigates all the benefits we're talking about from collecting that premium. And also, as Dan mentioned, the roll yield is going to kick in and start to bite you. So that window is a safe window for it. And again, it could be argued this put premium is going to get even less in the coming weeks. So it may be, if you want to do this now, this might be the best you're going to get. So intriguing. I'm curious, what do you folks think? You like yourself a little bit of a bullish risk reversal? You like the longer term leaps trade on BITO? I guess if I had to pick one of the two, probably would go the risk reversal. I like myself a little bit risk reversal, and also I like the nearer term duration of this one versus getting in on that leap. I mean, the erosion on that one is still, you got to work hard to overcome that longer term out there. Speaking of, let's keep on rolling here. More, you guys have crypto on the brain today. 678 HHT. That's a heck of a handle. He says, do you guys have a favorite crypto broker for Bitcoin options? All right, well, there's a few things to unpack there. You know, a lot of you guys think of your crypto brokers, you know, your Coinbases, your Krakens, those big ones. Robinhood obviously has crypto as well. Not going to find a lot of options offerings on those platforms, as you probably have already seen. If you want to trade options, at least here in the U.S., it's different overseas. Every jurisdiction is different. Overseas, you can trade Deribit. You could trade a bunch of other venues that do a lot of paper. We cannot trade those here in the U.S. So for the U.S., our options, pun intended, are right now LedgerX, which is effectively a broker and an exchange in one, which a lot of these firms really are. So you can go there to set up a separate LedgerX account. They are now actually called FTX US Derivatives. They were just bought by FTX. So they have some muscle behind them now. They're going to get a little bit more resources behind them. So they're interesting. Also worth noting, those contracts, I believe they have a 1/10 Bitcoin. They have a mini Bitcoin and they have a 1/10 ETH. And those are physically delivered. So if you want to do a covered call against your existing spot Bitcoin holdings, you can do that with those contracts, which is kind of interesting. If you want to buy some underlying, you can do that with those as well. So they're one of the few physically delivered contracts you can get your hands on. That's one place you have to go. But again, you have to set up an account with them. You can't really access LedgerX through any other portal that I'm aware of right now. Then maybe that'll change with the FTX deal. But for now, that's not the case. The other choice you have really is the CME options, which luckily for you, 678 HHT, they did just launch some new ones about a week ago. So we're brand new era for CME, the micro Bitcoin and micro ETH options on their futures. So those are not going to be physically delivered. So you don't have to worry about taking any delivery on those. They settle to their reference rate for ETH and for Bitcoin. And for a lot of you who thought the 5x futures multiplier on the Bitcoin contract they had, and I think it was 50 ETH, something ridiculous on the ETH front, that was too big, and clearly it was. These are much smaller, much more viable. And if they don't have them listed already, check your broker. If you have a broker that can handle futures and futures options, chances are they probably already have these listed. Again, they're just a week old, so maybe you haven't seen them yet. Maybe you have to wait for them to propagate a little bit. But that might be your best bet if you're comfortable doing futures options, because you can get those on just about any major platform. A TD is going to let you do those. An IB and some others will probably let you trade those as well. So that might be your best bet. And in terms of essentially cleared all the things you come to expect from traditional options trading, that will be there. So in terms of that, I probably would say go that route if you want to use a more reputable, quote unquote, broker, or if you want to try your hand at Ledger X and let us know what your experience is. Dan, do you have anything to add here on the favorite crypto broker for Bitcoin options front, sir?
Not really. It's something that I don't have a ton of experience with. One general statement that I'll make is if you ever trade any derivatives, you gotta make sure that there's some sort of clearing house, because the whole reason why clearing houses exist for, stocks and the options market and the futures market and all that is because defaults have happened. And you don't want to be in a situation where maybe you buy some Bitcoin on some exchange and, you buy a long-term put to protect it. You think everything's great. And all of a sudden it crashes, you lose $200,000 on your Bitcoin position, but you're like, oh, but that's okay. I've got a put. And all of a sudden the person on the other side of the put, fled the country and it's not going to make good on it. That stuff has happened. It's why there are clearing firms. So I'm not familiar with how Ledger X works. But if you're going to trade it there, make sure that there's some sort of clearing. Make sure that your trade is legit guaranteed.
Yeah, obviously CME is going to be the best bet for that. Ledger X, still kind of a standalone entity there. That's why they do have deep pockets behind them now with the FTX. You probably have seen them buying up stadium naming rights and stuff. So they got some capital. Doesn't mean they can't go the way of the dodo, but probably a little bit harder for that to happen there. But still, yeah, CME, been around for a while, over a century. So you can probably take faith that they're going to be around for a little bit longer. We got more of these, Dan. Let's go out on this one here. Let's go to Melanie. Melanie says, where can I trade ETH options? Thanks. Well, I kind of just broke it down for you, Melanie. Quick recap. You can do Ledger X with their physically delivered ETH. I believe they are a 1/10 size contract there. And that's if you're comfortable with everything we just said, the counterparty risk, having to create your own account. So you can't take your existing brokerage funds and use them on Ledger X. You kind of have to siphon off a certain portion that you want to use just for this and transfer that to Ledger X. But if you're comfortable doing that, Ledger X is certainly an outlet. You can also trade, as I mentioned, the newly minted, newly listed micro ETH options. And I think for you, that might be a better choice. Again, given your familiarity with futures and futures options, that could be a little bit intimidating. I get it. But in terms of all the other things we mentioned, the central clearing, the counterparty risk, and all that kind of stuff, you're going to be much better off from that front on the CME side. And also the CME stuff is probably going to be available on your broker that you already use. So you don't need to siphon off excess funds to put it in a bucket just for ETH options. You can allocate some capital that you already have in your accounts to this, which is, I think, easier for a lot of people out there. So again, if you can overcome that hurdle of the futures and futures options, which again, I get it, it could be intimidating, then that might be a good way to go. I have to look, I have to get some numbers. Again, they just listed about a week ago. I want to get some early volume numbers on these micro products, but they're going to start picking up. If they're anything like the futures, the micro futures on ETH and on Bitcoin really were pretty active. So it's a good sign that the options will probably be active as well. Dan, anything else to add here on where Melanie can go to trade her ETH options, sir?
Yeah, no, you hit it on the head. I mean, you've got these two choices, Ledger X and the CME. I would say that's it. Don't look at some of these smaller ones that offer these sort of like, makeshift futures and options on crypto, because I know for a fact some of those don't have backing. Those would be dangerous. So stick with the big ones.
But Dan, Joe's House of Crypto Options is going to offer me, if I fund an account, I get like 100% back. It's great. Why shouldn't I go there?
Hey, that's perfect. Just go to rugpull.com and...
No, it was Joe's House of Crypto Options. They're very legit. We've all heard of them. A great outlet there. I'm just kidding, Melanie. Do not go to Joe's House of Crypto Options. I don't know what you'll be waiting for you. But what is waiting for our secret club, Cool Kids, is another episode of Boot Camp right now. Dan, for everybody else who's on demand, they have to wait a week. Maybe they want to go check out your content in the meantime. Where should they go? What should they do?
Yeah, come on over to markettaker.com. 2 T's in a row. I send out a video about 3 times a week to all our followers, and it gives some good market commentary. People seem to really like them. I try and make them as helpful as I can. And those are all free to anybody who comes to markettaker.com and clicks that join now button.
There you go, markettaker.com, the place to go. We got to get on out of here, but we'll be back again for all you Secret Club kids right now, for all you on-demand folks in a week. And then we'll be back again a week after that with another brand new episode of Options Boot Camp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.